So I think from Ajay comes from Sriram Capital. So again, business side, but a perspective will be different. CV will build a risk side of it. So again, interesting perspective. Ram will bring the perspective completely from a technology perspective, a stack player, how they're providing their guidance. And Vijay comes from a technology perspective. Again, Clicks has been very, very deeply into partnership. So I think we wanted to bring a flavor of all and how the compliance can be built up. And this is the panel which we have. I think the best part is potentially we could have built. So thank you guys for joining. Thank you, Ajay. Thank you, Ram. Thank you, CB. And I think Vijay is in the progress. So if he is, I think can somebody coordinate this out for?
Yeah, he's just joining in some way, so you can continue.
Yeah, sure. Thank you. Thank you. So maybe before we start, maybe just 1 minute introduction and maybe thought process from your perspective, each one of you. So Ajay, your perspective on partnership between bank and fintech or NBFC and fintech, and a brief thought on how compliance are shifting and what should be done. Just quick first shot at that.
Thanks, Samir. A lovely panel organized here. So much of I would say cross-functional leaders out here. I think it's going to be really interesting. So first of all, to give a brief introduction to what I do, right, in terms of managing digital initiatives for the group. Sriram, as you know, we are the leading players in terms of financial services providers. Apart from that, we are also leading in insurance and investments as well. Now, from our perspective, what we also look at is we look at partnering with a lot of fintech players. So the first part was about getting the right fintech players on board who could give us the right capabilities, and also at the same point of time, what kind of business models do you want to carve out with them? The second piece is how well are we getting transparent in terms of the models to our customers, because that's the space which we need to always be looking at tightening up. Right? When I talk about tightening up, you're talking about the entire workflow in an entire supply chain. Is onboarding going to be transparent? Is loan servicing going to be transparent? Or is it going to be, risk and underwriting, which is going to be at any point of time, there is a maker-checker process, compliance norms are not being met and things like that. So that's the angle of thought which we carry at the organizational level. And we look at sorting out and collaborating with the right fintech companies who can help us scale. So that's where we stand as of now, Samir.
Thank you. Thank you. Maybe, Sivi, you want to quickly give the same view from your perspective, since you're sitting on the risk function and you control, and today you do so many partnership, including neo-banking side. So quick perspective from your side.
Yeah, good evening all. Thank you, Digital Fit team. I have to appreciate Digital Fit team for the topical content, topical subject they have put on table at this moment. Why I'm telling this is very topical. One is from the industry side, fintech industry side, there is now enhanced requirement for compliance. That's what this discussion is all about. That means that the industry is getting into a fast lane for maturity, the maturity on risk management, compliance management. So that is to be well appreciated. And on the other side, what I'm seeing is this discussion is necessitated because the regulator also has started focusing more on technology risk, compliance on that side, and fintechs. That also means that fintech has become so significant in the financial landscape that regulation and compliance has to step in so that the entire thing goes smoothly over a long period of time. In these two perspectives, if you look at this dialogue, this discussion is very relevant. And I also want to highlight on the fact that probably for the last 2 years or the last 1.5 years, if you see the regulatory actions and the regulatory regulations that has come out, most of the significant regulations were based on for technology risk management, ICT management, primarily IT governance, outsourcing risk management, and also the operational risk management guidelines that has come out last week, which very specifically focuses on third-party risk management, technology risk management, and business continuity management. So this is the context I want to, this is the perspective I want to give as an introduction for this dialogue. Yes, Samir.
Thank you, Sibi. Thank you, Sibi. Ram, over to you. Your thoughts, and you are in the midst of using sort of, we are partnering with so many players, so it'll be good to understand where you are coming.
No, again, Samir, thanks for having me. And obviously, the topic is very, I think, very relevant right now, and probably is center stage in many forms. And yeah, so like obviously the fact that we work across fintechs, NBFCs, insurance companies, large banks, PSUs, small banks, large NBFCs, and also multiple countries. Just incidentally, we just got our license for Kenya to be a data processing provider. Okay, because we work with insurance companies in Kenya. So now the
Oh, wow.
obviously data privacy bill over there is implemented and being practiced, right? So which is the part of it. So which is where I think from an or obviously we are a tech fin, right? And more than a fintech. So we do work with all the regulated entities and LSPs in the context of the DLG and DLAs, right? Okay. So what we do see is again, see earlier compliance was probably a few years ago, compliance was largely application security, VAPT, and information security, right? But I would say in the last 3 years, 2, 3 years, compliance has come into the fact as digital has become mainstream for businesses, right? It has also come into the perspective of consumer or the consumer protection. Okay, so the consumer journeys comes into part. So if you look at it as an organization like us, right, for us, compliance comes all the way from contracting, as in prior to contracting, we do go through all the mechanisms of certifications of multiple forms. Okay, the basically aspects of compliance comes into the contracts, which are separate addendums that we sign. Okay, into the part of it. It comes into the way we deal with in all our products, right? I mean, as simple as this KYC, the video KYC stack or the KYC journey part of a custom bank account opening journey or insurance or this thing. Well, like PIVC, pre-issuance verification, that's a solution that we implemented in Vietnam and we also do in India for the insurance perspective, right? Now, each of these process now, I would say compliance was probably, I mean, there was some amount of effort, but today a lot of effort goes to understand the changing landscape of compliance. I mean, as simple as this, I think almost a year and a half back, RBI kind of mandated, or it actually came from even the DFS perspective, is terms and conditions, right, on use of Aadhaar in your applications has to be explicit. So we had to change our contracts to make sure that our customers who are using our KYC API and other things, right, have the right kind of terms and conditions specified in their onboarding journey. So I think that is where it is. So that is the part of it. And obviously with the data protection and privacy becoming more and more relevant, I think and with the part of third-party data, a lot of the data which is going on, how do we kind of use them? How do we manage them? That is becoming the other part. And also with the account aggregator ecosystem becoming large scale and also the digital public infrastructure coming in, right? A lot of this are becoming multi-party contracts, right? In how you're dealing with this thing. I mean, just to give you the example, right? In an LSP context, I mean, like recently we are doing a program with NPCI on the RuPay card. Now, it is a multi-issuer program. How do you take consent? Who does the bureau pull, right? And how do you ensure that the each of the issuers are not doing the bureau pull again, which basically impacts the consumer part. So I think from that perspective, we do see all the directions from a lot of us would, and in the short term, feel that the compliance overheads are a lot more. But I think the broader direction is there. And I think the most important part is as fintech or tech fin, we do feel that we have become mainstream businesses. So, which means that some of these things are governance and this thing, compliance are basically at a board level discussions and very consciously tracked by our investors to say that how compliant are you with all these aspects, right? That's the change. And at scale that you're at. So I think businesses have to factor in depending on the size, especially for the tech fin and fintechs, anywhere between, I would say, in the initial years, anywhere between a 3 to 5% of their cost in just building the effective compliance automation.
No, perfect. Thank you. So, Vijay, we were just doing, and thank you, Vijay, for joining us. I think I'm sure you must be facing challenges in joining, maybe. But Vijay, we were just trying to get your perspective, just high level first perspective. We're just doing introduction and getting your perspective on this compliance in this current structure when you're doing Bank-Fintech partnership. You've done a lot of partnership in the market as well. How does it work? How do you execute? And just first level thoughts before we go in depth.
Sure. So I think the first, let me introduce myself. My name is Vijay Kumar Ramakrishna. I've got 3 decades of experience with banks like Deutsche Bank, Bandhan Bank, and Yes Bank as a CIO and CTO. And recently, 2.5 months back, 2.5 years back, I joined Clicks Capital. So initially, the partnership which we are doing mainly is the co-lending partnership with the banks. Am I right? Like first on the SFTP and second on the API integrations. So there are a lot of challenges which are faced while doing this partnership with the banks, where the expectation of the bank is 100% compliance on the data and all. And if you see that in the NBFCs that we have to up the game in terms of API integrations and the data quality, what we push through the API integrations, which we do through the partners like UB or Dwara. So the one thing is that which we saw is that the API integrations needs to be fast. Second, the LOS needs to have the quality LOS has to be there, which makes the field mandatory, which has got auto fetch, auto populate, and auto push mechanism. Otherwise, the level of the bank technology is much higher than the NBFC technology. So that's what's the second learning which we got. And third learning is that you have to start all the integrations parallelly. Means the NBFCs have not don't have as much deeper pocket as the bank. Means we have limited resources in terms of people, process, technology, cost, and budget. So how to smartly work in a frugal way to have the integrations go on parallelly, and also sometimes on SFTP, sometimes on API integration, sometimes on the full-fledged middleware connectors which is supplied by UB and Dwara. So it's an exciting period where this partnership will help both bank in terms of sourcing and in terms of NBFC to leverage the bank's balance sheet. So these are the challenges which we face, which we learn, and we are speeding up how to do the integration with the banks on the back end side. On the front end side, quickly I will say that we had an awesome partnership with Paytm. Now currently we have partnership with Moneyview and one more partner. So there the changes are very fast for the sourcing partners. That the players like Moneyview or Razorpay or Paytm, the changes are very fast. So we have to do changes very fast, and we have to be very agile in our business rule engine, because business rule engine will be in-house or will be of the parent. So the changes needs to be agile. So we have to work in a sprint mode. We cannot use a waterfall technology because they change their rule every week to attract newer customers to fasten up the lending. So that's the agility, and the way we communicate faster with the agility development and quick deployment, that is extremely important for NBFC, because fintech are more agile than NBFC, and NBFCs are more agile than the bank. So that's how we learn, and we are coping up with the speed, and that's how we have built an awesome partnership with Moneyview, Razorpay, and till 2 months back we had with Paytm. 2 or 3 months back we had stopped with Paytm. So this is how we work to ensure that the back-end partnership, the co-lending partnership with the bank, where we leverage the balance sheet of the bank and they leverage our sourcing and underwriting governance which we have got. They leverage that, and we leverage the fintech partners for on the BL and PL side of it. So that's how we have ensured that our balance sheet grows, and we benefit the bank on the back end, and the front end we take a benefit from the sourcing partners like Moneyview, Razorpay, and Paytm like companies.
Thank you, Vijay. Thank you, Vijay, and thank you for going in specific as well. I think कभी-कभी हम बहुत elevated रखते हैं तो समझ ही नहीं आता क्या बात करते. Thank you for talking about both front end and back end. Co-lending obviously is a different place where you are actually be the sourcing agent for others, right? Which NBFC main one not as used to. Where you're doing this securitization, and co-lending is very different ball game altogether, right? It's from moving from Excel to system. Okay, tough it is. So I think Ajay, I wanted to get your perspective. So from a business perspective, most of the time business is far ahead in future, right? Top line, bottom line, ये नंबर करना है, ये पार्टनर से उड़ा देना है, ये लाइव हो जाना चाहिए 2 दिन में, 8 दिन में लाइव हो जाना चाहिए. Some random thoughts. We've all heard it, and I'm sure you would have also spoken like that, right? But in the current context where regulation becomes so critical and control points become so tight, what should be the right role model or thought process for a business guy to scale up partnerships, and how do you ensure that you do control points together, you work with fintech such a way that it's auditable, controlled, and all of that. So I just want to get your perspective that how your role would have changed and your role in future will change as regulations become the critical point for scale up.
Yeah.
Not business first, but control points as well.
I understand. So I'll put this perspective to you, right? I mean, within Shriram, the advantage is that we've also got a technology company in house. Now, if you ask me, are we pure player legacy, being a large company? we do have our own things in terms of, how much of numbers we do and things like that. But at the same point of time, we also run a technology company at the back end as well, who also understands the need for, building solutions at scale. In fact, we are one of those few companies who's built an in-house LOS and an LMS as well. So we don't look at, building it. We've not used somebody else's solutions. So it's something which the group has invested into some few years back. And while we talk about solution in itself, and while compliance also gets stricter, what we've seen is that everything boils down to the crux and the simplicity of how well your processes can be aligned. I think at some point of time we overcomplicate words using, saying that things are going very tough and things like that. I to be very honest, if you look at it from a consumer perspective, I don't see much of a difference in terms of, what the expectations are. So if you look at what are the changes which actually have happened in the digital lending guidelines, it's about how transparently can you communicate what your pricing is to your consumer, and how upfront can you show it to him so that things are working out better. How can he access, and how can you validate who the customer is, and what kind of policies can you run, and what kind of data do you store for evaluating a customer? Is it going to be consent based? And how does your entire architecture look at solving for the entire piece of it, so that tomorrow there are no disputes which are being raised? And even if there are disputes being raised, or if there are service issues, how do you look at handling it? So this is the entire framework. When you look at it, you bring it down to, a simpler 2-3 points. And how do you address it is preparing it and working at a very modular level. So from an organization standpoint, what we do is every single part of it is something what we look at, bucketing into modules. And every module, what kind of events happen, what kind of events need to be tracked, what are the potential issues, what kind of triggers can we look at if there are any risks that we run at any point of time. So this is something which we work internally, so that, at any point of time, we'll be able to gather enough information to cover the kind of issues which we could come up. While numbers are obviously there, but at the same point of time, it does not overrule the fact that, we need to be looking at cutting corners to be doing numbers. So, and we come from that mindset at Shriram.
Okay, and maybe just to give you a thought process, how much time would, how much of cost would typically in a typical partnership project, because of so much of compliances, what will be the impact on the cost of doing it, the business now, to the cost it was there earlier? So I just want to go, I don't want to quantify exactly, but some pointers will be useful.
No, so what happens is that, I wouldn't say cost. Cost here is time, right? How do you look at reinventing processes again to fit in things? How do you look at explicitly communicating things which may or may not have been there? What could be new additions, which at any point of time? See, if you look at banks are very highly compliant, same with NBFCs as well, compared to smaller organizations who would have wanted to overrule at any point of time. But when it comes to costs in particular, what we see is that what are the things which you need to be including? Are these changes going to impact only your LOS or your front-end journeys? Is it going to impact your LMSs? Is there going to be a structural requirement which is needed? And these are the decisions which actually impact, and depending on what the impact is going to be, you'll be looking at trading off. Is there a significant change? Is there a big delta there? Answer is no, but there is incremental delta. That's what I would put it across.
Thank you. And Sivi, you are on the compliance side, right? And risk and compliance earlier were always fighting with business, right? All the time. All learning, right? That's how the meetings would happen, right? Now, everybody is looking at compliance. So how is the journey on, from your perspective, what should be the business guys thinking from the compliance side? How should the operations team be thinking on compliance side? And how should the fintechs need to think about compliance? Because at the end, business has to be done. Business exists today. So how can you be enabler, or a compliance team be enabler, and work in a collaborative way to scale the business together?
Samir, the philosophy of risk management is, if you manage the risk in a robust way, it will take care of compliance and the entire future potential of the company. In the recent guidelines that RBI has come out with for operational risk, they have clearly segregated the first line, which the business, the operations, everybody has to be owning the risk. They have to identify and own and manage the risk. So that is the way now risk management and compliance has to settle in an organization. That should be part of the culture. That should be part of the routine. That's what the regulator expects from banks and matured NBFCs. Having said that, in a fintech partnership, when I looked at, regulator will only regulate the regulated entities, while through this regulation they will also regulate or partly ensure that the compliance is happening in fintechs as well, or the third parties as well. So that is the core point that we'll have to always take note of. Unless the fintech is not taking care of the compliance through their risk management, probably on a long term they will have to suffer on the compliance side. Now I will just brief how banks look at the risk management in third party engagements. The first thing is that while onboarding itself, the due diligence have to happen, and the second point is that the banks do that. The contract is a critical point in bank fintech relationships. Regulator also pointed out that whatever be the risk management that the bank wants to see in the fintech, that has to be properly documented, and legally enforceable contract should be there, and that should also contain proper exit and the clauses that alert the entity or the regulated entity of the issues in the fintechs. Then the ongoing and continuous due diligence is one point which all the regulated entities or banks have to take care of. And the final point in risk management is, yes, proper warning signals, proper alerts, and proper signals. These are the key points by which the process of ensuring risk management and compliance in the fintechs that banks take care of. While I say this, some of the core major risks I also want to highlight on what these days bank fintech partnership always encounter is. One is obviously the cyber security risk or cyber risk, and the data risk. These are the core two risks which always the partnership should take care of. And while I say this not only the partnership, the bank should, or the entities should take care of the not only third party risk, end party risk. It reaches to fourth party, fifth party, and end party. So end party risk also each partnership have to take care of. Besides that, yes, the fraud risk also one area in which this partnership should take care of. Then it comes to business continuity, how it ensures the business continuity. From risk management, now the focus is shifting to resilience. So how the business continuity ensured in the partnership, it should be through joint programs, joint business continuity drills. All this have to happen among the partnerships. Then compliance risk, business risk, all these risks have to be taken care in the partnership. Then only the partnership will bloom as per the in line with the regulators' compliance requirement and for a long time.
Thank you. So Ram, from your perspective, I think we talk about compliances and all from a bank and a fintech perspective. I want to take a view on two sides. Do you see fintechs getting into the direct compliance side, even the tech fin side, right? So that will be potentially the point. And secondly, what kind of tooling is required? So one is that people aspect, train people, put systems, process. But how do you put it through a tech side, right? Because aap kitna bhi padha sakte ho, right? So how do you put in the DNA, in the structure, or are there tools available which can help you in complying faster, better, sharper? Because business has to be done anyway, right? I mean, if there's no business, there's nothing existing, right? So any thoughts from a tooling perspective, thought process? So only two direction. Do you think fintechs will get under direct umbrella of regulation if that happens? Tech fins can also come if it looks like. And then, of course, this is second is a business question.
I think I kind of completely agree with this Sivi's point that right now that regulators operate with the REs, regulated entities, correct? Now, whether it's a fintech or a tech fin, it is a derived compliance, right? So which means, but just if I look at the factors, the only difference which I would say is, maybe in 2016, 17 to 20, a lot of the compliance or the RBI interactions that I've had in the times where we have been invited to be part of an RBI audit for some of our customers, right, was about whole net banking phase, I mean, how are you doing this one? Is it kosher? How are you protecting consumers' data and all this, right? Okay. If I look at the last 2 to 3 years, right? On an average, we do around anywhere between 170, 150 to 180 audits per year for our
Okay.
customers, right? Our customers conduct audit. These are big four audits plus the a bank or an insurance companies, their internal teams coming in doing audits and also, right? So which is where, and like, I mean, the questionnaires and this thing. So on an average, we built our own internal large language model to basically even generate responses to the information security and other questionnaires, right? Because it is the volume that comes in is part. We can obviously have a large team doing it, and also it's not just about the size of the team; it's about the quality of the team, that they understand product, the technology, and the rules of it, right? Yeah, yeah. I've verified in the last 2 years, I would say we have probably been part of specific questions sent by the regulators, right, through our customers across banks, NBFCs, probably around 10% of, correct. It is then translating into the fact is also translating into reps and warranties in contracts. I mean, declarations to the fact is this one. So, there is which means that, and obviously we deal with all kinds of data, okay, structured, unstructured data. In some cases, there are structured APIs. In many cases, APIs are not there. Given the size and scale of our organization, and we have been very strong on governance from day one, very strong on transparency, strong on governance. There are players in the market who give declarations saying, boss, I have a data pipe and all this thing when nothing exists. Okay, right? So they're either working with third parties or they're this thing. But then we are very conscious to say, boss, this is what I know, this is where we are as an organization, right? So a lot of times our contracts take much more longer because on legal contracts, we kind of say, well, this is what this is the extent of rep I can give. Okay. It translates into indemnity and all those parts, right? Okay. So from a technology, so what has happened now is, like I remember this was way back in 2000, Microsoft had introduced security by design. Okay. I mean, Microsoft software was so vulnerable at that point of time that it was buggy, it would crash, it had exploits, right? I mean, Bill Gates mandated that at a principle, Microsoft products have to be built security by design, right? I was at that point, I was working in my past life very closely on Microsoft products, right? But I do remember. So today, for us, a lot of it is about security by design. Data design is important, right? As in, from a listing perspective, what data are we dealing with? How is the part? And finally, the most important part is the whole compliance aspect, right? So that is becoming a very distinct. So today we have, I mean, we have obviously the data protection officer, we have the information security team involved from the design perspective. Okay, right? I mean, at this point of time, we are doing a lot of evaluation from a privacy bill perspective. What kind of data is flowing through us? Okay, what all tools are there? How do you solve for it? And what can be mitigated? What can be? Because as simple as this, you will build all the external security on your inbound to protect it, but there's always the internal risk. And as we think more and more digital, a lot more data, a lot more challenges. So that comes from a part of it, so which is where our spend on security and this thing, I think, is being tripling every year. Okay. And today, like I said, it's anywhere between 3 to 5% of our turnover. Okay. Right. And which is probably lot more than turnovers of many of our competitors. Our spend on security is more than their overall turnover. So I think one of the things.
Sir, we're getting scared. Okay, your top line is very high then. Okay, so.
So the point I'm making is actually as financial institutions start thinking about these things, right? The ability of a company, right? I mean, to basically be able to scale and manage these risks requires capital. Sadly, I might be diverging, but in the last 2-3 years, it has basically become a race to the bottom. Everyone wants everything for free, but then they want the highest level of security, the highest level of compliance. It is not financially sustainable. So I think there is some more need for this thing. So that is coming from a perspective that you have to factor this thing. And again, for us, we have 9 major product lines, right? Okay, across this thing. So which means, and a lot of them are this thing. The other part which comes in is most of the time, the biggest challenge is compliance changes are too short notices. Right. Now, the part is we have to make those changes, provide it to our customers, implement it, and also across customers, right? When think of the fact is 200, 300 customers, APIs have to be kind of rolled out. Okay. And I think the other part which comes in is like, obviously, large institutions have well-defined processes. Okay. They have checks and places in place. Mid-size would have this thing. Smaller players would say, "Was let me build out and then figure out." But I think what has happened in the fintech in the last 2 years is a clear understanding about that do you can't just basically ride the wave, right? You have to do your business right. So I think there is a whole part of maturing, which is where even if you look at the whole fintech community, right? They are put into this whole self-regulating organization, both in terms of the authenticated ecosystem, in terms of the digital lending, where I'm
Fair,
part of
fair.
a sort of formation committee to say that how do you bring in those controls in place, right? So I think that is the bigger part. So which means, I mean, so that is the challenge which comes in, and the biggest challenge is interpretation of regulation. There is a
Fair.
draft. Okay, I mean, I was just looking at the part. The latest draft of RBI is on aggregation of loans.
Stop. I think let's not go there. Oh, बहुत ही
Yeah.
complicated है. How
So,
would you show part of it? I mean, how many
which
bureau
is where,
pulls you'll do and what will do?
correct. So that is where it is. So which means that after the directives, a lot of times people now. I mean, again, just a point there is today I already have queries from customers saying, "Boss, how are you supporting us in this one?" The RBI has just launched a paper for inputs, right? But our customers are already thinking about the part of it, and then it leads to interpretation. So I think I think cost is a different aspect, but I would say a lot of time organization spends and our custom in the relationship with whether it's a fintech or a relationship or with an NBFC or a bank, right? That goes in understanding these things, right? And that is where is the biggest part. So, but it is as you grow as this grows, which is where you'll see a lot of businesses this year. I mean, in the last couple of years, are probably more focused, especially on the fintech or the new age lending fintechs, okay, or players who have focused more on governance and risk management than about 40 or 60% growth of top line. Okay,
Right.
that's a
Agree.
shift.
Absolutely. Absolutely. Perfect. 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 So I think there are a lot of questions coming in. Please keep sending your questions. What I will do is I'm actually asking the last formal question to Vijay, and then I'll take your questions and try to bounce off and get views on that. So Vijay, finally everything which you throw at the bank in a fintech relationship will end with technology team only, right? कुछ तो करना पड़ेगा, right? Process, control, technology, and all of that, right? So, from a tech perspective, how would you, a CIO, look at compliances, CTO look at compliances, and how do you work at scale, right? Because you're as a CIO now, you're managing your own channels, which is branches and all of that. You're doing partnerships, so there's another framework, and then you have partnership on both sides, front side, back side. How do you manage this complexity? So I want to know what is the skills required now for a technology team to lead this transformation, because now you're in the center of it.
So yeah, so one advantage which I got from the compliance perspective, my background is from banking. Only 2.5 years back, I entered NBFC. So my out of my 3 decades, I think mostly 2.7 decades into mostly into banking or IT supporting banking, Wipro and all. So I was supporting the banking from IT, or I was a CIO, CTO, or CEO tech in the bank, Deutsche Bank, Bandhan Bank, and Yes Bank. So that's the advantage. If the banking team comes to NBFC, that's the advantage because they come from a higher compliance environment to a lower compliance environment. For example, I'll just give an example where CISO is supposed to recent guidelines says CISO cannot report to CTO or CIO. CISO has to report to CRO. A recent guideline. It many of the NBFC guys cannot digest it. That how come CRO can give any technical help for CISO and all. But I know that this was to happen 20 years back, 22 years back in Wipro 2003. I remember the CISO was moved out of IT head and made reporting to the ED level, means not to the CTO. So and also Deutsche Bank, where the CISO was always reporting to CRO, not to CIO, CTO. And many places, NBFCs which are a smaller size, they are not able to understand the compliances. So we have implemented Lex Comply tool where all the compliances, though it's a hectic, exhaustive work. So sometimes the question is asked, are we over engineering it? Means the number of resources are not going to be increased because more of from a G culture which come from, because Clicks Capital was erstwhile G Money and G Capital. It's like every year your sales has to go up, the top line has to go up, the bottom line has to go up, but the OPEX cost has to keep coming down. So number of resources we are optimizing in terms of budget, people, process. Means cost optimization more from a sweating which we do from IT versus AUM or IT versus OPEX cost. So that is a challenge which we foresee, and the skill sets which we are taking is mostly I am preferring skill sets from NBFC because the banking guys coming, there are a lot of processes here. You have to now the processes are becoming stringent, but you need smart peoples in the BTG business transformation or business solution group vertical, the PMO vertical or the engineering vertical to how to follow the process but still be very agile, because you cannot go to the board saying what that we took 2 months to get the legal compliance done, and that's the reason our project got delayed, because every month the targets are there, the sales targets are there with the AOP numbers, so we cannot miss any target, and IT is the enabler. So IT is not a back end now, IT is now a front end. If the take the CISO was reporting to me for last almost 2.5 years. Only a month back, I handed over to CRO. But apart from that, analytics, digital, and everything is reporting to me. So the expectation from IT is like you partner with sales, and if it's not a direct sales accountability, you have to take the ownership of the numbers happening on the ground. So we are hiring people from the NBFCs or any IT companies like or product companies like Nucleus who can come and hit the ground running, because the number of resources are very limited, and they have to come and get the ground running. And second thing, in my almost 2.5 years, I realized is that this low code and zero code platforms, these are a myth, because we spent 2 years, they will say, sir, plug and play, it will start working. It doesn't happen like that. Means a journey takes 2 years, 2.5 years, and you बोलते हैं सर हमारे प्लेटफॉर्म में कुछ भी हो जाएगा, मतलब आप चांद देख लो, सूरज, सब कुछ, everything they promise that everything on earth can be done, and when we do for one journey, sir, this is not feasible, our platform team rejected that or that. So in that case, in the long run, as the Apple CEO says that in the long run the costliest things becomes the cheapest, because less maintenance cost, less cost, you fly down to their city, they come down to fly your city. So instead of that, like Finacle or Nucleus, just plug it and forget it. Am I right? So the product means now we have taken this year. My target is to get entire exclude. We have two businesses: secured business and unsecured business. So this year, unsecured business, I want to bring it onto single enterprise LOS platform. LMS is already single. So consolidation. Otherwise, a single change, I have to go and make changes in 3 or 4 different LOS. It's a nightmare, and it's not like a Finacle where the patch comes. You just apply the patch, test it in UAT pre-prod, and it goes. You have to give the BRD to them. They don't, all these low codes and zero code platform doesn't have a functional experts. They have a bunch of developers and the college pass outs and directly the CTO. So it's very difficult for us to work with this low code and zero code platforms. I don't want to write them off, but if you are in a growing phase, better to avoid them, because they promise moon, but they're not nowhere close to earth. Means it takes years and years for them to build zero code or low code LOS. It's a very jazzy word or sexy word, low code, zero code. But actually on the ground, I've burnt my fingers. So we are just getting back to the product, the full-fledged product which helps. And the focus, I tell the thing that I should be forgotten. Like more you discuss about Vijay and technology means I am a pain. If you forget about me, then everything is working. It's invisible. So I am mostly into sales now. We are getting partnering with sales to get the single enterprise sales management app instead of 3 different silo apps. Single enterprise sales management app, single enterprise LOS. We already have single enterprise LMS, and now we are maturing as an organization to get into treasury management app and ALM. Now we realize that 6,000, 7,000 crore books AUM, you cannot do it on Excel. You need, so just I fought the battle and got a budget approval for ALM and treasury, and we are implementing that. So now what I think is that since I've worked for so many years in the bank, that RBI is stepping up the game on compliance on the NBFCs just 5,000 crores and above. So like what Bandhan, and yes, I saw that we initial few years they were lighter than our the level of compliances, they started increasing to the bringing it to the level of ICICI or HDFC Bank. So the same thing now, NBFCs, I think they have increased the game to bringing it to the level of SFB. So which is tougher, tighter, and more apps like suspicious management, AML. I was just going through that 10 compliances we have to do within 6 months or 1 year, like pre KYC, AML screening, all those things which were happening manually. We digitized it, and some we are in the process of digitizing. So it's a good thing for NBFC to get into the compliance where we have to have, and that too you have to work in a very smart way, and ending up that you cannot put it on your cloud and keep increasing your cloud cost. You have to get into a SaaS based OPEX model where you pay per hit or on a monthly basis. So it's an interesting time. It's a much different game rather than working in a MNC bank or Indian big universal banks. NBFC is like what I think you have to come up with a unique way of doing it in a frugal innovation. Means your pockets are not deep. Like you have to come up with the means in Hindi they say ना कि जहाँ बाकी लोगों की सोच रुकती है वहाँ टेक्नोलॉजी की सोच चालू होनी चाहिए. Means that's the expectation of technology. They come that no, I've come up with a problem, give me a solution. So everyone look towards technology or digital as a solution provider, and it's not easy. Means it's literally test our mental, physical, and emotional stamina to work with an NBFC in a profitable way. So, but we keep doing it, and we have to. And one good thing which has helped is partnership with the relevant CXO. I said that you are also having a problem. I'm also to figure out. So let's partner rather than escalate. So that's the mode which we have used, and I think it's a ever evolving thing. We delivered thousands of changes, automation projects, and first year I thought that second year will honeymoon will reach. Second year we do thousands, and this year means the project never ends. Means it's like expectations of sales, the compliances, the risk. It means it's never ending. Means we thought that now 1 year will come, we'll stabilize and we'll not do many changes in projects. That time will never come. That's what I understand in NBFC. So that's the interesting phase where the new joiners from banks who join NBFC are loving it. And I'll end up with last one. There's one guy whom we offered 2 months back. He came back, said that I said I want to come and join back Clicks. I said what happened? So first time heard someone saying that I don't like that company, some housing finance company, because they don't have compliances and processes. So I said welcome on board. Here you will have an overdose of that. So that's so. But it's good to know someone leaving a company because processes and compliances are not there. When I said that you welcome on board, you will have welcome to the jungle. We will be having an overdose of compliances over here. So that's the level of compliances which RBI is putting on NBFCs. And recently got to know that in January till now, in 4 months, they have penalized 4 NBFCs for not having suspicious transaction management software. And I spoke to some 15 odd, and I have created a new NBFC groups. Only one NBFC has gone for suspicious management transaction management software. Rest all are evaluating. But I think now the game is to rush catch up, and that's where Samir we will partner up with you and your sales head who came and met me. That how you can help me in a frugal way to get us in a smarter program management way, faster way, in a frugal way to get us compliant. Thanks, Samir. Back to you.
Thank you. I think I somehow feel always that frugality is missed when we do any transformation, right? It is you end up hiring and expensive guys, and then they be expensive solution, and we figure out how sort of we end up with some US products in India which we don't even know, right? I mean, let me not name anyone, right? But let's pause now. I think there is tons of knowledge we got. I know that many questions are still unanswered, and we had here the best of the guys here. And I just realized that I just look at the timing now. We are, I think, 8 minutes off. But I think I know I'm taking a liberty of this thing, but maybe DPDPA is coming, right? Maybe if one or two of you can just give a quick view, how should we deploy it? How should we get ready for it? How should we make it work, right? DPDPA. Anybody can take it, maybe just one or two.
No, from a DPDPA standpoint, the first thing what comes to my mind is basically how do you look at, get access to information? How do you manage access to information, right? That's where your entire protection comes into play. And how do you look at capturing data at every source being maintained? And how do you look at correcting? So these are two phenomenal factors in terms of, how you see DPDPA coming into act and what kind of technology can back up to secure data at this point of time. So that's my 2 bits on it.
Perfect.
Yeah, so just from my part, see, obviously one of the biggest part which we see, right, is the consent management, right? I mean, obviously there was a bit of consent management built under the ambit of account creator, but now every data that's been asked for, right? I mean, at every point you're asking consent. How do you keep consent records? How do you track it? How do you have a mechanism auditable, and how do you forget? Correct. That's the first part. The bigger challenge is data. I mean, we've been spending almost now for the last 12 to 18 months, we've been looking at various aspects of data management. One is data discovery. What data is there? Second is obviously, I mean, within the part of it, the PIA part of it. The third is the data which is going out of your environment. I mean, ours is all outbound inquiries, right? Which API is being called of ours to figure out, right? And any other tech fin which comes into play, right? Now, technically, in the notion of the data that the data is going to a bureau is also comes under the ambit of, right? Now, how do you kind of manage, how do you discover, and how do you kind of build mechanisms to solve for it, right? Incidentally, earlier in the day, we have done some 2 or 3 product POCs and evaluating on it, and my team was saying I want to have They said like what Vijay talked about, right? A lot of these companies present you the moon and the Mars and the Venus as propositions, but reality is very different. They said we will tell you in your entire request response all the way across multiple systems what data is coming. I said, how is right? Sumit, my CTO, and we're talking about it. We said was everything is HTTPS. How are you going to inspect that and figure out what is there? Okay, right. So from that perspective, as to what kind of, there are quite a few tools we have. So first thing is first part we are solving for is to make sure that given the fact that if we solve for us, we solve for a lot of our clients. Okay, I mean across industries from a large perspective. So which is where we have invested in basically understanding the data transmission, the data persistence and all those things. Okay, right. And how do we kind of look at it in this part of it? So there are obviously several tools. We realize that there are enough players both globally and also many startups coming up, which are interestingly solving this part of the problem. So that is one part. The other part we also realized is all these technology changes in terms of your natural language processing and all those things was there. Now it's all LLM part of it. But in models, the data that are being used for training the models, right? After that, your subsequently who has access to the data and what happens to the data in the model and all the parts of it, right? That becomes a very different problem statement. Okay. Because today, whether it is the image processing part of it, whether it is in terms of the deduplications, in terms of fraud and other part, right? Like even if you see deepfakes, okay, that's a bigger kind of a different kind of challenge. How do you even mitigate that from a compliance or risk perspective? So those are some of those things we are looking at both from a proliferation of data from both at a compliance of the act perspective and at the same time as with the increasing levels of technology, how do some of these things change?
Samir, I will also add a few points. The primary thing, the primary thing is data governance. And what sort of data classification, how can we define all those? Then even in consent management, besides consent management, the use of data, we have to identify the use of data. The data is used for the right purpose for which the consent has been given. So there are a lot of pieces. Then in the end of consent management, the exit data has to be removed if they withdraw the consent. So these are all technological. I mean, a lot of technology has to be put in this side. But besides that, proper data governance has to be in place. Then only we will be able to fully comply with this requirement. What I understand is that the penalty, on all discussions, the penalty can be astronomical.
Yeah, you're finished basically. That comes and you're out of business, right?
Correct. That's true.
See, the insurance cost of it is going to be much more higher than anything else. Your GMC policy.
True.
Perfect. So I think just one quick question. How will the orgs, maybe another question which is slightly bigger. How should the organization get restructured? Because would you need a separate officer for fintech compliance, right? Because it is getting complicated, right? Every RBI will come back and say you should do that. Or in the tech team, there should be guys who are running this compliance separately. So I'm just worried that compliance becoming central, it will become very weird for them to do. And how do you ensure that business is trained for it? I mean, I've heard this statement like crazy. अरे CUG नहीं करेंगे, कुछ नहीं करेंगे, live करते हैं. Testing, we should not do any security, बाद में देख लेंगे. So I think how do you get that ingrained, right? So just a quick view on how the org structure should change, how the responsibility should change. जैसे cricket में क्या होता है ना, IPL में you have a cricket score and then the fair play score, right? So how do you get that aligned? Any just one or two points before we close? I think Shashank is just indicating that we are run out completely time. So maybe just 1 minute.
So, Samir, I'll just take quickly on this one. In the NBFC, what I did that I spoke to 20 NBFCs and bank guys. What they have done, the CISO one, I have created a parallel role BISO, reporting to CTO or CIO. CISO reports to CRO. And then we have created one more role. Actually, I just went depth and asked that guys, the DPO fits in right in the legal team. It's more about legal, right? Data protection. But those guys didn't have an expertise. And also, I started with DPO. And there's a lot of theses and done that why CISO should not play the role of a DPO. DPO should be separate part of legal, but currently I have assigned DPO from IT team, data protection officer, additional responsibility till the head. In the new year, I will go for a new headcount, but have assigned a data protection officer and the data protection checks, which like the data protection officer also gets involved in any PII data getting shared or any new in the architecture review committee. CISO, BISO, and DPO, all three are part of architecture review committee of any new applications getting done, and also the process review committee, the PRC, which is run by the ops risk team, that how the data flows or any discussion about the the DPO data protection also gets involved. So my data protection officer works very closely with the legal experts, the legal head and the deputy legal head on anything with reference to data, because they are doing a lot of study and a lot of things on that, how the legally it will impact. So my data protection officer is doing this data protection certification, data protection officer certification, and he's getting deeper into that. So now we have three angles. BISO does the day-to-day information security operations. CISO does the compliance and security. Protection officer gets involved from data governance, data protection perspective, DDP. But he or she doesn't have that much in-depth expertise as the legal expert. So he or she directly works deeply with the legal. But in matured banks and all, the DPO is part of legal organization, and because it's more of a legal thing, and they do a DPO certifications, and that they do it. But in many of the NBFCs I've checked out, DPO is part of IT, which I've done it, but they work very closely with the legal team, and this is how the structure does. CISO reports to CRO, BISO and DPO reports to CTO or CIO. That's me. But in the banks, DPO is part of legal environment, reports to head legal. Over to you. Back to you.
Thank you. I think questions are coming continuously. I'll also take a feedback from you, and Shashank, you can actually pick up those questions as well during the day. I think thank you for extending your time, folks. I think we went certainly past your planned time by around 17 minutes, but thank you for your patience. Thank you for joining us, Ajay, Sibi, Vijay, and Ram. I think बहुत अच्छा लगा. I think मुझे लगता है कि we should do more sessions on compliance rather than business हो जाता है. अभी सबको पता है business tech भी हो जाता है, compliance नहीं होता, right? So thank you guys. And with this, I hand it over to Shashank back, and we proceed. Just one or two pointers. Please give us your feedback. I think your feedbacks will really help us in sort of aggregating and understanding what more should we do. I think we should also and we will also share back all the details back to only those guys who will actually give feedback. Otherwise, क्या होगा? We'll inundate with you over your decks. So our decks will be shared to all of you who will give us the feedback. I also want us to sort of be aware that the plan is actually this is a longer day. We are only on compliance side. So till now we have covered a panel discussion. Till now we've just overextended, but we'll get into a unified compliance framework. We'll also do a launch of a white paper. So we'll share the framework around that. We'll talk about DPDPA and then so on. And then we'll have a 6:15. So as 5:40, another panel coming up with the industry leaders. So the day is long, and I'm sure a lot new knowledge piece will come on board. So with this, thanking you to all of you and handing it over back to Shashank. Thank you, guys.
Thank you, Sameer.
Thank you, Samir, and thank you,
Thanks a lot.
everyone.
Thanks a lot, everyone. Thanks.
Thanks.
Pleasure. Thank you.
And it was enriching learning experience for all of us. So thank you, everyone.